there goes nothing. So, okay, let's begin like we usually do with Bitcoin. Okay, and I'm gonna do this a few ways. So, first way, carrying on from last week's stream, like I mentioned on YouTube, I was talking about this zone right over here, right? 46195, 46252. This one right over here. And the reason I mentioned this zone to begin with on the last week's stream again is because this is an area where sellers are in control, right? Before this candle came in, this was without a shadow of a doubt an area where sellers were in control. Yeah, you can tell so very, very clearly, right? Candle body opened here, right? You went as high as 68,997, but look where you closed, right? You closed at 46,195, meaning this wick is representing an area where buyers were not able to absorb all the supply that the sellers threw onto the market, right? And if, as you know, if supply is greater than demand, that's going to lead to a devaluation of the asset, right? And that's what we see over here. In the following candle, we just confirmed that because candle body opened, right, where we closed pretty much. You went up, but then you see as soon as you hit this, as soon as you inched into this zone, you got smacked straight back down, right? So you confirm the validity of this zone as a zone of supply. Note, I'm not saying this is a supply zone in the liquidity pocket sense, right? Because this isn't the structure for a liquidity pocket, the way I teach them anyway. This is just a zone of supply in terms of price action, right? This is looking at genuinely where have sellers versus buyers, whereas there is skew in terms of sellers versus buyers. There is very much a skew towards the sellers in this area. That's why I'm not going to call it a supply zone. I'm going to rather call it a zone of supply, right? So looking at said zone, right, if you then go down the time frames, right, 6 months. So this 6-month close, amazing. Look, why you closed above the mid of the said zone. Previously, even on the 6 months, you can see all wicks, no candle body closes within this zone. But now what you've done is you've come and you've closed candles within this zone, and even within this zone above the 50% mark, right? This is very bullish. Note, with this particular time frame in mind, you would not be surprised if for some reason you ever came down to 46k, okay? Because that would be a retest of the candle body closes. That'd be very, very bullish on the higher time frame. Nothing to worry about. But we're not going to focus on that until we lose this mid right over here, right? Until this mid is lost, we're not going to focus on that. So first and foremost is, do we lose the mid or not, right? And in this 6-month candle, because obviously we still have 6 months now till this candle closes. Do we lose the mid or not? If we lose the mid, ultimately that's where I would not want to get lower than this. Basically, if you get lower than this, that is a break of structure in my eyes, right? And that'd be bearish, right? But until that happens, the mid is the first level we're going to focus on. Going down the time frames, 4 months closes in 2 months, right? The current 4-month candle closes in 2 months. So we still have 2 months for this to close like this, okay? So I think we still have 2 months of potential chop, okay? I still think we have 2 months of potential chop. So, don't start putting all your eggs into one basket right now. Obviously, still manage risk, still have that in mind. This 4-month close will be an important one in my opinion for this reason here. Look, same logic as we applied over here, okay? So this is the 6-month seller zone, right? And let me just go on to style. I'm just going to make this, actually no, 9% is good. This is the 6-month/12-month seller zone right here. Now, with the same logic as before, let's draw the 4-month seller zone on, right? Here we go. Again, same thing as before, right? On the 4 months, you haven't had any candle body closes, right? So that's 57,791, 57,789 here. You haven't had any candle body closes within this zone, right? Forget the 6-month one, just focus on this one for now. This is representing in history a zone of supply again, but this time on the 4 months, right? On the 4 months, you can see, price wicked up to 64k, right? First, and then you had this candle body close below here. The following candle body close confirmed the validity of this zone of supply, right? Meaning sellers are in control. And the following candle, look, wicked even higher, but it's still closed below. Further reconfirming that this area is an area where, buyers just haven't managed to close any candle bodies because the supply is too great once price gets here, right? And what have we done currently, right? One 4-month candle broke in, right? You broke in above that zone. And this currently 4-month candle is a ongoing retest, okay? This is an ongoing retest of this breakout. You still have 2 months right? You still have 2 months for this candle to close. You never know. Within the next 2 months, you might wick all the way down here and close up. You never know, right? I'm not saying it's definitely going to happen, but as long as the 4 month closes above this area, you're fine. And in particular, 57,789, okay, the low of this box. In the next 2 months, as long as Bitcoin closes above 57,789, in my opinion, for the last 4 months, we are good to rally higher. Okay, that's my current thesis. Of course, with that far ahead in time, it might change, right, as more data presents itself as time goes on. But for now, that is what I'm thinking. Okay, we have the next 2 months to close above 57,789, right? I don't care how low we chop, as long as we close the next 2 months above 57,789, we are good for the last 4 months, in my opinion, to really to rally on higher. Okay, so that is a 4 month outlook, right? And then now let's look at the 3 months, right? On the 3 months, looks absolutely bullish, 793,787. This is the 3 month zone, right? Right over here. And I'm going to start making these lighter and lighter. Right, so here's your 6 months, here's your 4 months, here's your 3 months, right? On the 3 months, you can see what we're doing is we are rejecting off the mid, right? We did close the 3 month below the mid. It'd have been really nice if we closed above the mid. We didn't. We closed below the mid for now, right? So this is, like, if you were to just look at it in this aspect, is both bullish and locally bearish, right? Why is that? It's bullish because, look, right, you broke out, right, of the 6 month mid, of the 4 month low, of the 3 month low as well, right? And you retested successfully those entire areas, right? So if you were higher time frame bullish, this would be, for example, a swing you try to take. But the reason I wouldn't then now give this long is because you, at the end of the day, you'd still be longing at range highs, right? So I wouldn't take a swing at range highs, full stop. I wouldn't do it, right? I just don't like the chances. I don't like taking a chance like that, right? I'm not giving swings at range highs. Instead, since this is the 3 month, right, we're closing below the mid, your RR is much better, right? If you haven't hedged, you try and maybe take some hedges if you're completely unhedged to one direction, okay? If you're not hedged, do consider hedges, in my opinion, since we did close below the mid of the 4 and the 3 month, right? You've closed below the mid of both the 4 and the 3 month. You could definitely still chop her out a bit more, right? So 2 months, right? Here is the 2 month closes. Here is the 2 month candles. And what I'm going to do is just do this, right? Here we go. And then 357, 359, right? Here we go. This is the 2 month, right? Same logic as before. On the 2 month, this is the area where buyers couldn't close any candle bodies above. We did close this 2 month candle above, right? As much as we have SFPs to the upside, buyers are still demonstrating strength here. This is the 2 month and the monthly, okay? And last but not least, we have the 2 weeks. I'm just going to note all this down, just so you guys know where you're coming from. 313, 312. This is the 2 weeks, right? And last but not least, this is the weekly. I'm not going to go lower than the weekly. 502. 502. Okay, so perfect. Right over here. All these white lines then, right? They're mids of important time frames, right? So over time, these are what's going to be providing support and resistance. And if you actually take a look, we take a zoom in over here. We go on to something like the daily, right? And we zoom in, or better yet, let's go on something like the 6 hours where we have enough candles. Here we go. You will notice it is an interplay of these mids, right? Tops and bottoms and mids, because that's where the important time frame levels are, right? What you are doing right now, you have rejected off. This is again the 3 month, okay? What you're rejecting off of right now over here, right? Let me turn some of these lower time frame ones off. So that's the weekly, that's the 2 weeks. That's the monthly and the 2 months, right? 3 month and 4 month mid is what you're rejecting off of right now. If I was to go on to the daily, you can see you have SFP'd, right? 12 hours is already closed below. So if you wanted to take a hedge, right? If you wanted to take a hedge at these prices, you do so like this, okay? Maybe stop loss above somewhere here. Or even if you wanted to tighten one above this, but I'd put it somewhere above here like this, right? And risk to reward trade of 3 for me. So actually, let's put stops a bit lower, something like that. Risk to reward trade of 3 at least. So basically, you'd be targeting the 6 month mid slash this low. Okay, why this low? On the 12 hours slash the daily, this is the area where buyers were active, right? This would be a logical hedge for you guys to take, like this. Look, on the daily, this is where buyers were active, right? So it's a logical hedge for you guys to take. The mid of that level is here, pretty much risk to reward trade of 3. I take, for me, if I have to jump in a trade, and my students already know this, for me it's a risk to reward trade of at least 3, okay? If it's less than a 3, I don't take the trade, okay? For me, minimum risk to reward of 3 for me to try and attempt a trade. If you're not confident on your downside, you can even reduce position. This is just a hedge in case you are completely positioned just for upside, okay? Because at the end of the day, you could definitely chop a bit lower, right? But with that in mind, okay, this is an amazing close, okay? Don't let me fudge you. I'm not trying to fudge you. I'm just giving you objective hedge in case no one is hedged. But this quarterly close was absolutely amazing. Look, 6-month mid retested, like 4-month, 3-month low retested. You're literally closing and retesting candles on the quarterly at areas where before buyers just haven't been able to close candles, right, on the higher time frame. This was an amazing close. So, like I said, right, I'm not gonna put 46k out of the question, but this is only, and I repeat, this is only going to happen, right? This will only come into validity if this low here is lost, right? If the mid is lost and you start to turn this into resistance on the higher time frame. For example, on the weekly, you drop down and you start to you fail to recapture this 4-month low slash this 6-month mid. If that happens, then you have a reason to think, okay, well, there's a demand zone here, there's a fair value gap here, and there's a 6-month low here. These become possible targets, right? But until the 6-month mid is lost on the higher time frame with confirmation, I'm not going to be targeting these lows, okay? There's no point. Look, on the quarterly, buyers have defended this area, right? This is such a pivotal area. This is, look, never before has this happened, right? Never. Where you've closed 3-month quarterly candles, right, above such important levels like this, right, with retests. Because look what happened last time you attempted to do it. Straight breakout. You had no opportunity to catch the trade until you got the bear market retest, right? You had no opportunity to catch the trade. But now, you know, you're seeing the buy step in, defend what was once major resistance, major zone of supply into a zone of demand, into support right in front of your eyes, right? So this isn't like you gotta be on job here, right? Like, of course, I'm not saying don't hedge. Hedge in case of more chop. Hedge, right? Like I'm saying, the next 2 months could lead to more chop. At the end of the day, you still close the 2-month below the 3-month and the 4-month mid, right? Could definitely lead to more chop in the next 2 months. So until this 4-month candle closes, I still think, you know, let's see what the market gives us. We'll just take plays, take profits aggressively on the scalps, so on and so forth on the hedges until then. But this is looking optimistic, right? This is looking really, really good. Because at the end of the day, you cannot argue with the validity of the strength that the buyers are showing here. Look, no candle body closes, candle body close plus candle body retest, right? Absolutely crazy. Let me check back to Discord and check the chat. You're sub Caleb, brother. Hope you're good. It depends, bro. For spot, I've got a long-term spot bag, and then I've got a trading spot bag, right? My long-term spot bag, these are ones where, you know, I don't give hard stop losses, right? I don't give, like, you know, oh, I'm going to TP here. For me, it's a hold. If you go lower, DCA more, and I will just manually close everything out. Once BTC starts showing higher time frame, you know, bearish divergences, so on and so forth. Once I basically think, okay, we look pretty topped out on the higher time frame, we might roll over to a macro extended downtrend. Yeah, sure, bro. Rai, I hope you have a good day, bro. But yeah, until I think that we're gonna have an extended, like basically go into a rollover into a extended bear period again, my long-term spot bag I just don't touch. I just close everything once I think the top is in, basically. For my trading spot, I treat that more like you would a normal trade, right? So I'll have an entry, I'll have a DCA, if I think, you know, the DCA is needed. I'll have a stop loss, and, you know, I'll have more aggressive TP. So even though it's spot, I might TP at a 30% move up, 50% move up, so on and so forth. Basically, with my trading spot bag, I'm not necessarily looking to, you know, double take initials out, so on and so forth. Like I'd say that's the safest, you know, spot strategy people go with. Because with my trading, my goal is just compound, right? With my trading spot bag, it's compound, compound, compound. And it's the same with my leverage. I have a swing account, right? I have a swing account, and that was what I gave most of my calls on last year, September, October, you know, June, July, August, September, October, yeah. That's where I give those calls. Because if I think I've caught the bottom of something, I'm willing to just, you know, layer in over time, layer in until the big impulses happen. Just keep layering in and not have any hard stop losses, because I don't want to be liquidity rated at the lows, right? But if I'm scalping, then I will definitely have hedges. if I'm scalping to the upside, for example, once a risk reward trade of 1 to 3 and 1 to 4 is hit, I will take some profits, move my stop loss to break even, and then, you know, I will take a hedge, because in case we go down, I want to capitulate on that as well. So depending on the higher time frame, right, like weekly, 3 months, monthly, everything, we are definitely trending up. I don't see any reason right now for me to trim my long-term bags, because I don't see any higher time frame weakness here. If anything, you know, there's monthly, you know, hidden bullish divergence on Bitcoin, things like this. I don't see the point in closing any positions on my higher time frame bags yet. But with that in mind as well, if I am, like, you know, mainly in spot, and currently I'm trading more spot than I'm doing leverage, because at this chop of the market, my main bags are in spot right now, right? Like, I'm still leverage trading. I'm not saying I'm not leverage trading. I do a lot of scalping. I'm not, like, you know, holding swings basically for leverage. Holding swings is when, you know, I gave the calls right down here. That's when you properly hold swings, because that's where your risk to reward makes sense for swings. For BTC anyway, risk to reward doesn't make sense for a swing here, right? There's also definitely that, you know, for swings, risk to reward makes sense, but for BTC it doesn't. Also for ETH, I've not got any huge swings, right? That I'm open fresh. Like, my swing is from 1500s for ETH, because swinging is from you do it from the lows, right? You don't wait until something's impulsed up for extended months, like for BTC, for example, 1 to 3 months of solid impulses up, right, in between consolidations. I'm not going to look for a swing after that's happened, that's for sure. So in moments like this, I will be looking for hedges, any opportunity I can. And with hedges, I will trim more aggressively, because at the end of the day, even on the weekly, trend is still to the upside, right? So higher time frame trend suggests that I should TP more aggressively. I'm not looking to short down to 20k, 30k, right? That doesn't make any sense. But since the daily is downtrending, right, it has been anyway, I don't know if that's, no, it's still downtrending, it makes sense to take some hedges, because over here my risk to reward is really tight. And if, for example, if I was to take this short, right, and Bitcoin then was to come and do this, right, and put in a higher low, right, then I've lost hardly anything, because it's a tight risk hedge. I've got longs open as well. I've got, you know, spot longs open. So this is literally a, you know, it's like you taking a syringe gun. It's like you're taking a syringe and taking a scoop out of the ocean and saying, oh, the water in the ocean is coming down, right? It's not. This doesn't affect my liquidity whatsoever if I get stopped out here. It's literally just a, you know, fail-safe measure, basically, let's say, a risk management method to try and capitulate in case there's more downside. To try and not capitulate, to try and capitalize on the move down. But yeah, this close, absolutely amazing. Let me just quickly check the chat again. Yeah, okay. This close, absolutely amazing on the 3 months, right? So, like I said, you could probably get more chop. And to back this up, if we look at Bitcoin CME, we do have lower time frame CME gaps beneath us, right? Here is an hourly CME gap right over here. Hourly / 4 hours, I believe, actually, yeah. Yeah, hourly / 4 hour CME gap right over here, right? And also, let me zoom in, make sure. Also, we have this one to the left. This should be taking you back down towards 59k, right? So, you know, this hedge could play out nicely, basically. You know, just in case this did lead to a drop down, the hedge could play out nicely. Around that 1 hour, you can see, right, all of this. So if you get any sort of impulses back up, any under lower high on the lower time frame again, like, the hedge would make sense, basically. But yeah, so that's BTC, right? Looks absolutely amazing. And like I said, on the we still have 2 months for the 4 month to close. We could definitely chop some more. I'm not saying we can't. For example, right, what did we do? In this 3 month candle, we printed a 3 month fair value gap right over here, right? And the mid of that 3 month fair value gap is right over here. So if you lost this mid, you don't even need to go all the way down here. You could bounce from here, right? And if you go back onto the weekly, you will notice that 3 month fair value gap mid lines up ever so nicely with this 3-day demand zone, right? So now you have a lot of reasons as to why price might come down here, right? And let me change the color of these so it becomes here. Here's your mid, right? Here's your 3 month fair value gap. Here is your demand zone. and this is a 3-day demand zone right over here. If you did lose the mid, now there's reasons why you might come down here, right? Look, a lot of liquidity, right? A lot of liquidity, 3-month fair value gap mid, like I said, right? 3-month fair value gap mid plus demand. So what I'm going to do actually is I'm going to do this, go on settings, and I'm going to turn the background completely off for the 3-month fair value gap. And then I'll just leave that on because it's going to look much cleaner, right? And text FVG 3-month. Let's go with 10, bold, yeah. Okay, so now if I go back onto the weekly, that should make more sense. Yeah, there we go. Yeah, so here's your 3-month fair value gap mid, right? Plus your daily demand zone. You can see a lot of liquidity reasons why we might come down here as well, right? A lot. There we go. So, you know, if you were to lose these lows, this is your obvious target, right? And since this is your obvious target, stops for this are going to be somewhere down here. You have a high time frame liquidity pocket here that within the next 2 months you never know, right? You could, for intents and purposes, you could do something like this within the next 2 months. You could have the choppiest period ever, but as long as by the end of the next 2 months, right, and this scenario were to happen, you close above on the 4 months where it is 57,789, none of that matters. Okay, none of that will matter. That's what I'm trying to point out here, which is why I recommend, right, if you see opportunity to hedge, like there is one right now, definitely, you know, I don't care if you have to reduce your position size, right, do whatever is going to make you comfortable hedging, but definitely put some hedges down, okay, because at the end of the day, if something like this were to happen, right, you never know, right, it could. I'm not saying it's definitely going to happen, but if something like that were to happen, you're going to be thankful you've got some sort of hedge against all your simple longs, okay. So, this is what I'm currently seeing on Bitcoin. If you flip this, obviously don't, you know, this is invalidated, right? If you flip this, then, you know, I think you go and take range highs again. And like I said, seeing as we have monthly bearish divs, monthly hidden bullish divergence, right? We very well could take out range highs first and then have a dump down, right? That's another thing. But that doesn't mean that is the only way it can play out, right? For example, if you want to be safer, this entry was given off a 12-hour candle close, right? If you want to be safer, you can definitely wait until the daily closes, right? If the daily was to close below, you could try and take a hedge then, right? But in that case, your RR might be a bit worse. That's the trade-off you're giving it, right? But yeah, that's what I'm seeing on Bitcoin. Bitcoin looks absolutely amazing, all things considered, right? If we get these levels, for me, it's just a bit. It's just a bit, okay? Because like I said, on the 4 months, right, I want to see that 57,789 being held. That's it. And for now, anything I enter is going to be with me biasing towards we're probably going to close the 4 months over 57,789. If I'm wrong, I'm wrong. It's what it is, right? But you got to have some sort of bias as well at the end of the day. So that's Bitcoin, right, guys? Let me just quickly check the chat, see if there's any questions. What is CME? CME, Chicago Mercantile Exchange, Gilene. This right here. This is where the big boys trade futures, okay? This is what moves your Bitcoin price the most. And just since this is, let's say, centralized, right? They act just like the stock market. So any bank holidays, any public holidays you might have, weekends, Bitcoin trading and Ethereum trading, those two have CMEs, they will be halted, right? They will be closed, just like with traditional stock markets. But we know crypto is a 24/7 market. So what this can lead to is discrepancies in price between the CME close and the CME open, right? And when that happens, we say there's a CME gap. And CME gaps tend to get filled, right? Obvious one that happened right over here. This was a really nice CME gap fill, among so many other things, right? And this was the moment everyone should have been bullish. All my students will know this. But this was a beautiful moment. CME gap fill that propelled us upwards, right? So yeah, CME gaps is basically, you can think of this like a liquidity pocket, okay? Like unfilled bids, probably going to get filled at some point. Yeah, CME futures. Ethereum has one as well. Yeah, Felix, brother, I do. Solana, we'll take a look at Solana, Josh. Let me just see if there's anything else I need to cover on Bitcoin first. I want to make this thorough. Okay. So like I said, boys, don't expect lower until this level's lost, okay? The 6-month mid. That should be your make it or break it level for now. Just have that noted somewhere, right? The 6-month mid / 4-month low area, 57,789-ish. this dotted white line here, 57,789 to 57,600 basically. If that is lost on the higher time frame and you fail to reclaim it, then you can expect these lower prices. But until then, there's no point hoping for lower. Okay. So that is Bitcoin. Let's take a look at total as well. Okay, because total closed yesterday. Look at total close. Same thing. Okay, I'm doing the same thing here. Look, 12 months. This wick is indicative of the fact that once price got up here, this wasn't sustained by the buyers, right? Sellers took control and closed the price here. Look what we did now, right? That's this area. 6 month agrees, right? And same as Bitcoin. 4 months is now currently above the said area, right? 3 months, successful retest of the said area, right? Just like Bitcoin, right? Just like Bitcoin. Total looks amazing. 3 months, that's a breakout, that's a retest of an area before, where even on the 3 months, look, in total, no candle bodies were sustained within this zone. But now, you rejected off the mid, you successfully claimed the bottom, right? So for total, what you're saying now is, okay, as long as this zone holds, right? And now the reason I marked this zone out is because in the 3 months, in the last quarter, this is where, quote unquote buyers were active, right? You could have a pullback into this area, the mid, the lows, whatever. As long as this holds, you're good for higher, right? If not, you do have now, again, a 3 month FVG. The mid for that is over here, right? As long as we raid these, and at the end of the day, on the 4 months, we close above 2.185 trillion. Total looks primed to explode upwards as well, right? So there's a lot of reasons for you to be higher time frame bullish, guys. A lot of reasons. I do not think the macro top is in, okay? And the reason I'm saying macro is because, like I said, we can roll over on the daily. We can roll over on the 3 day, right? But look what the quarterly did, right? And I know many of you probably aren't used to such higher time frames, but you need to be, right? Because this is where you get your long-term strategies in, right? And your long-term strategies are one of the most surefire ways you have of actually making it, okay? Not chasing the 5-minute candles. And I'm not trying to shun anyone that chases 5-minute candles, bro. I chase 1-minute candles when I'm scalping, okay? Sometimes less. But if that's all you're doing, you're going to have a really hard time focusing on what matters, focusing on these important closes, right? You're not going to see that on the 3 minutes, on the 5 minutes, even on the 1 hour, on the daily, you're not going to see that, right? So, have a good juxtaposition between both higher time frame and lower time frame. You need to have that interchangeability, right? You need to be malleable with your time frame analysis. So, look, total 1 looks good, okay? Total 1 looks absolutely amazing. Looks better than total 2, looks better than total 3, looks better than others, right? So this tells me, look, Bitcoin probably hasn't finished topping out yet. Because if total 1 is still looking better than total 2 and total 3, that's telling me, okay, money's still probably not done rotating into Bitcoin yet, right? Once total 1 actually looks like it's topped out, that's when you're going to see the proper total 2 run and then the total 3 run, right? Because look, if we do the same thing we did on total 1, right, on total 2 and total 3, look, total 2 hasn't even touched the zone yet, right? But total 1 is closing within. So this tells me, look, total is still in the lead, right? Money rotation to ETH has not happened yet, right? Therefore, your others, your total 3, your old season hasn't happened yet. If you think, oh, I've not made it, I'm going to wait for next cycle, bro. What do you mean next cycle? You mean next leg of the run? We're not done yet, in my opinion. We're not done. Okay, so that's total 1. Let's look actually at Dixie and USDT dominance as well, right? Dixie for now definitely looks good, okay? I'm not saying Dixie looks weak. Dixie actually looks good. There's a potential bat over here that I saw, right? 0.511. 86 on the retracement, and 86 targets here. Of course, I don't know how long it's going to take for Dixie to do this, right? It's the dollar, this is not a shit coin. But, level by level, right? Level by level at the end of the day. This is not a completed harmonic, right? Just because I have put this down does not mean we need to go to D. This harmonic isn't complete until Dixie actually goes to this area and, we get price action confirmation at the 886, okay? For now, this is just a potential harmonic. But Dixie has been making higher highs, right? Higher highs and higher lows, locally speaking. Higher high, higher low, higher high, higher low. So if it runs up again and it managed to flip this 382, right? Flip this 382 over here. And the reason I'm saying that is because the reason I gave majority of my calls last year when I did was because of this, right? SFPs at the 382, which was the mid of this supply zone. Premium confluence for me, right? I had an inkling we were going to roll over and get risk on. That's the reason I gave these calls. Same with USDT dominance, right? It was at the same time frame that the top came in. But now if you actually flip this level, what you're saying is, look, as before where buyers couldn't sustain candles, the flip would indicate that, okay, the buyers are showing serious trend there. You would expect to move up, right? maybe to the mid of this fair value gap on the weekly, right? Maybe to the liquidity rate golden pocket extension over here, right? You have a really nice fib cluster up here. But all eyes on Dixie for now. At the end of the day, look, you are below the true range lows, right? Low, low, flip, flip here. You're still below. Look for the flip of the black line first, then you look for the flip of the yellow. If that happens, look for the flip of the white. If the white gets flipped, it's wraps. I reckon Dixie's gonna go much higher. So that's this is something that could pertain to Bitcoin chopping some more, right? Because we know Dixie and Bitcoin is not a one-on-one correlation, but Dixie being bullish does have bearish connotations on risk-on assets, including, you know, indices, stocks, Bitcoin, so on and so forth. USDT dominance, on the other hand, looks absolutely tragic, okay? And the reason I'm saying that is because, look, over here, right, let's do this, one sec. Let me do it like this, actually, right? We have 3 candles in a row on the 6 months where you've been just red, right? Just red. And now what you're doing is you're looking like you want to bounce. You're definitely looking like you want to bounce, but same logic as before. This is an area where on the monthly, buyers were active, right? That's what the wicks are telling you. But you keep using that as resistance now, meaning an area where once you had buy pressure is now turning into an area with sell pressure. If you cannot flip this on the Dixie's going to top out, it's going to go lower, right? And look at it on the weekly, this was nasty, okay? This is a nasty weekly close. And same thing here, if we do this on the weekly, here is your weekly zone, right? If you were looking at this as a traditional asset, I would be telling you, okay, you know what, you've got a higher time frame hedge opportunity on your hands, boys. Something like this, right? And then buying lower, for example, risk to reward of 3 would take me to a obvious order block, right? External liquidity, this would be a short that I would be willing to take a bet on. So Dixie looks ready to top out, right? What that means for Dixie, I have no idea, right? What that means for Dixie, I've got no idea, right? I really hope Dixie doesn't go under. Not Dixie, sorry, USDT dominance. I really hope USDT doesn't go under. If that happens, I think everyone's fucked, right? Literally everything we trade, whether it's pairs, what we store our stable coins as, majority of us is USDT, right? I'm not trying to FOD anyone, but that's just the worst, like, you know, Terminator scenario, right? But yeah, I mean, if you're looking at it in terms of just the correlation, USDT dominance being inversely correlated to risk on, and in this case, crypto assets, this, you couldn't ask for a better weekly close. Like, if you're a bull, this is an amazing weekly close. And I hope this follows through to the downside, because then Bitcoin's going to rip and we're all going to make a load of money, right? So that's that for the USDT dominance. If we then turn this back on, yeah, okay, so that's that group 1 here. You keep bouncing off this for now. Like I said, Bitcoin, no new price, right? No new highs until this is lost, okay? Because at the end of the day, as bad as Dixie looks here, as long as it's holding this trend, it's not looking like death, okay? For example, if we keep doing this, this is a possibility, right? And this is something you don't want to happen if you are bullish, okay? Because this will lead to a right translated cycle, and that is not nice, okay? This is Bitcoin back down towards the, you know, losing 40k level kind of scenario, and that is not something you want, okay? I don't want that. I'm not positioned for that, you know? So, but as long as, you know, if you want new highs in Bitcoin, like I've been saying all this time, new highs in Bitcoin, you need to lose this order block, not order block, this is a textbook demand zone. You need to lose this demand zone, and more importantly, you need to bearishly flip this demand line. The day that happens, okay, the day that happens will be the day, I think, you sweep the lows. Bitcoin's going to go to 90k, 100k, 110, 120, 150, whatever your targets are, right? 6-figure Bitcoin probably incoming when that scenario happens. I'm not going to say if, because at some point you probably will lose this, right? But it's when. It's just a matter of when, not if. So we'll see. But this was amazing weekly close for the bulls, okay? Because now you have reason to believe Dixie's going to go back lower, right? Go back towards range lows, i.e. Bitcoin's going to go back towards range highs. Looking at USDT plus USDC dominance, same thing, right? This historical 0.94 level, you're bouncing off it. You made a higher low at this liquidity rate of the golden pocket 702, 707. but you're not closing above the golden pocket, right? So if you need to lose this 6.36%, and you have a chance at doing this again. But for now, 0.66 is being held. So just a matter of time, right? We just need to let price action develop, let it cook. Look at total. Okay, yeah. So next, let's look at Ethereum, right? Ethereum, right over here. And same thing with Ethereum. What I'm going to do, right? First things first, let me delete this. Okay. This is the 6-month area, right? Just like we did for Bitcoin again and total. On the higher time frame, 12 months and the 6 months, right? On the annual and the biannual, this is the area where buyers couldn't close any kind of bodies above, with 2 more yearly candles confirming that so far, right? This last 6-month candle further confirmed it. This is still a zone of supply, okay? And Ethereum does not look as nice as Bitcoin in the sense that, look, you did not close above, right? There wasn't enough demand from buyers here. This leads me to think, right, with all the good news that's been coming out for ETH recently, with ETH ETF and everything, there's a chance it might just be a sell the news event. Maybe we get a chance at slightly lower Ethereum, right? For example, we do have a 3-month fair value gap here on ETH, right? If it is a sell the news event and we do get 2,600 ETH, right? Amazing bid. For me, I'm picking it up. I'm definitely picking ETH up if it goes there. Just because, like, I just can't imagine how easy they're making it for retail, right? They're just feeding retail all this good news. I wouldn't be surprised if it's a sell the news, right? And I wouldn't be saying that if we had closed above, because if it closed above, this is a major area. Buyers would want to step in here, right? We could expect a strong floor to come in here if it closed above, but we didn't, right? We closed below. So the 3 months, right? Look, not as nice as Bitcoin, nowhere near as nice as Bitcoin. Compare Bitcoin. Look where this closed, right? Above the 6-month mid to Ethereum, right? Below the 6-month low, right? Not nice. This just been used as support. Further confirmations, no kind of body closes above. Until we close above this, right? I'm not going to be screaming for new highs on ETH, not yet. Okay, look, I am ETH. I'm a ETH bull. Okay, I have a lot of ETH. Okay, ETH is one of my largest holdings. I want ETH to perform, but I have plenty to add in case we are still chopping. Okay. Because look, I don't think Bitcoin's topped out yet. And if Bitcoin spikes first, everything's going to take a hit. That includes ETH against Bitcoin, right? Because Bitcoin's going to be outperforming everything. If that happens, Ethereum could have a spike down, right? Could. I'm not saying it has to, but it could. So if you do get the lower prices on ETH, like, I'll definitely add. This doesn't need to be filled now, by the way. Ethereum could run, make new highs, and in the next bear market, it could just drop really hard, fill this, and go up. It doesn't need to fill right now. But I'm just putting it out there that this is a potential target, owing to the fact of how this closed. Like 2 months, you can see if you're looking at the 2 months, you didn't even challenge the 2-month highs, right? So this is your 2-month seller zone, right? You haven't even challenged that yet. Monthly, you haven't challenged it, obviously. Monthly's all the way up there, right? So look, you didn't close above. It'd be nice if you closed above. And if on the weekly we go and we flip this, it's a different story, right? We go flip and we hold the flip, then we have a chance to go and take these out, right? But until that happens, I'm not taking any fresh longs here. I'm either going to wait for lower prices or I'm going to wait for that flip, because I need confirmation, right? When you have a candle close like this, you want confirmation. You don't want to just blindly enter because a quarterly closed. Okay, I want confirmation. So you either flip this, and I want to see successful flips. If that happens, I will start, adding in again, averaging up on my longs, so on and so forth. Or we get the low, we get the 3-month fill, whatever, right? Maybe there's a more lower time frame demand zone, right? Anything like that. You have a weekly FVG just below us here. Let's see if we have any ETH fair value gaps, right? So the last week you flipped the liquidity rate and it went higher. FVGs daily, no daily, not FVG, sorry, CME gaps, no daily CME gaps, 4 hours, just like BTC. Is there any? Yeah, there is a 4-hour CME gap over here, right? Obviously it's not the lows we're talking about, but still a reason to think in lower prices. So here's a 4-hour CME gap. Any unfilled ones here? No. Demand zone on the 4 hours, 0.5, 0.236, key area, right? So you have loads of liquidity pockets you could definitely come to, especially if the lower time frame, downtrend holds. This CME gap got filled, right? So if you can flip this CME gap into support, then you might go higher. This is now a mitigated liquidity pocket. Flip this, you're going to go higher, if not lower. 1 hour, Do you have any hourly CME gaps? Well, that one got filled and we went higher. This one, no, no 1 hour one. So that's the obvious one, right? So we'll see if this flips on the lower time frame, right? We do have an hourly demand zone here as well for the mid of the CME gap. If this flips, then you could break trend and go up, right? If that happens, then you could go and you could reclaim that area we're talking about here. You could go and reclaim this, and then we can talk about higher. If not, if you keep turning this into resistance, making another lower high here, then maybe one more spike down to range lows before flipping. Yeah. So that's for Ethereum. But either way, long-term prospects I think are good, right? Look, on the higher time frame, for example, local monthly still uptrending, weekly still uptrending, right? No downtrend yet. So that's Ethereum. So let me quickly go back to actually let me look at ETH BTC as well. Seasonality wise, ETH BTC is, you know, good. Seasonality wise, ETH BTC is completely fine. For example, yeah, right. First and foremost, vertical lines. What are they representing, right? I mentioned this months ago, last year actually. But what you'll notice with ETH against BTC is halving year, right? So 2016. The halving year is when ETH against BTC starts to rev up his engines, right? Starts revving his engines, gets the RPM nice and high. You get some chop, right? The burnout's there, but you haven't really moved yet, right? And post halving year, that's when you let go of the brakes and you absolutely take off, right? That's what ETH BTC did. Look, 2016 halving year, started to outperform slightly, bit of chop. 2017 onwards, right? That's when ETH against BTC really outperformed. Bottomed out halving year. Again, 2020 halving year is when you started, you know, revving your engines, you know, you started grinding up, bit of chop. But post halving year is when you absolutely rocketed up again, right? So we're sat at the same area again, right? And in this case, halving year 2024, you would expect something like this, right? Slow grind up, maybe a bit of red coming towards the end of the year, right? And just chop. And post halving year, right, 2025 onwards is when you would expect ETH to really outperform Bitcoin. Does not mean this needs to happen, but this is just the seasonality I've been noticing, right? Therefore, until proven otherwise, there's no reason to think, oh yeah, that's not going to happen this year. If the pattern says this is what has happened, right, in that case, well, until proven otherwise, that's what I'm going to go with. Trend has been held. You can see that, right? If the trend is your friend, let me go with the rotated rectangle. Is much more suitable for this area, like this, right? Make it a bit wider and then do this, for example. There we go, right? You got supports. You can see that major supports. 3-month fair value gap right here, right? Wick. If I unlock this once, here, wick to wick, right? 3-month fair value gap. You completely fill that. And what did you also do? Of the same fair value gap, you flip the mid, right? You flip the mid of the 3-month fair value gap, and now you're on the way back up. The next state of affairs would be to flip this high. If you flip that high, then you're good to go up higher. I am long on ETH against BTC. I did long here, but the reason I didn't call this is because I do not think anyone trades the actual BTC pairings. Okay, I trade it on Prime XBT. You can actually long and short the actual Bitcoin pairing itself. Okay, it's a nice thing to know. I'm long on this. I added on this. So if we flip this, I'll add some more. If not, if you start rejecting this, I'll just open a head short, right? So that's ETH against Bitcoin, right? Ethereum will outperform, or I mean, it should. I'm not going to say will, because the narrative might just go out the window this year, right? But it should, seasonality-wise, start outperforming Bitcoin soon, right? Something like this, perhaps chop, and then next year onwards is when we should really get that spike up. So that's ETH against Bitcoin. Okay, so let me check back in chat. Sorry, I've been rambling on and on. Just want to BTC to drop it again in some spot positions. Joint in March, the prices are at premium. Yeah, Felix. That's just unlucky, brother, right? And that's just one of the reasons why, you know, people who stick around in the bear market get heavily rewarded, right? Bear markets where you make those, you know, amazing entries, right? For example, if you go back in my channel, you see some of them, like, you know, just off the top of my head, I gave ICP at like $2, right? That thing ran for God knows how much. But so much, pretty much gave the lows on all the alts. But yeah, it's bear market. Those who stick around in the bear market always get rewarded, but you know, not many people do. Flipper B. Yeah, 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 Grassati, bro. Yeah, I agree. For the in regards to Dixie, yeah. So just waiting for the Flipper B first, and then we can go higher. Yeah, flip the B and give it the D. Yeah. Go to 45k. Okay, wait. Let's go back over here. What I would recommend is, look, you might want to go to 45k, bro. But it's not guaranteed, right? So if you're at an area where you see opportunity to manage your risk, do so. And I will say one thing for sure. Look, if you are in zero spot positions right now, you are doing this completely wrong. Okay, please have some exposure. The next leg of the bull market, I'm telling you, it's not over. I don't think this market cycle's over. Okay, I know this CT's all doom and gloom sentiment is so shit. Market cycle is not over in my opinion. Okay, you do want spot positions. Okay, now if you're entering fresh just here, do not go all in. Okay, leave room for chop, leave room for layering in. Right, go in with the layering in strategy. That's what I've been saying for the last 5 months, because now, right, at the lows I didn't say layer in. At the lows I've one bagged it, right? Because at the lows, what's the point in layering in? I'm willing to take more risks at the lows, right? That's why, I wasn't saying layer in for any of the calls I gave last year. But now that Bitcoin is at the highs, right, I'm not going to say one bang everything, right? Especially if you're just opening spot positions. Layer in, leave room for chop, have plenty of cash on hand, right? But have exposure, okay? Because at the end of the day, not many people do this, but averaging up is a strategy, okay? Who cares what your P&L percentage says? Do you care about, impressing people with, your high P&L digits, or do you care about actually making money? Because if you care about making money, you will average up, okay? You will average up. So it doesn't matter, right? Have some spot positions. If you go lower, layer in. If you start making higher lows, like on the lower time frame, you start seeing anything like this, just layer in on the higher lows. Average up, average down. But when you're at the area where your risk to reward makes sense, layer in, right? You want exposure, because the next leg of the cycle, when all start flying, you're gonna wish you weren't just in USDT, okay? So my advice to you, brother, don't blindly just hope for 45k, because I know I mentioned this as a potential target, but that is only if we on the higher time frame flip the 4-month low and the 6-month mid here, the white line, into resistance, okay? And even then 45k isn't guaranteed, right? You might come and you might literally just bounce off this zone, and then that's it. That's your liquidity rate, right? You might have, for example, this might be, actually now thinking about it, this might be a beautiful higher time frame AMD model, right? Here's your accumulation. You might get some sort of manipulation, right? So this was an accumulation manipulation distribution model on its own, but maybe you get a manipulation like this, right? You might not even go that low, and then from there maybe you just absolutely blast off for your distribution phase and go towards, like, I'm gonna put it towards 120, something like that, right? Maybe that'll be a distribution phase, right? You might not even get those lows. My point being, when you're at range lows, layer in. If you drop lower for spot, layer in some more, right? At this stage of the market, you want exposure. But if you're just entering fresh, you also don't want to go all in, because at the end of the day, your risk to reward is completely dog shit compared to someone who entered like down here, right? But the good news for you is, this is for Bitcoin. Many alts are actually still at the lows, right? Many alts are at the lows. So, find a couple altcoins you like, find narratives you like. For example, AI, RWA, two narratives that are surely going to perform this cycle, right? I position myself accordingly. And just take it from there, bro. Just layer in, because you don't want to be caught with your dick in your hands when we do finally pop off, right? Because they're not going to give you a 3-2-1 go for the pop off. They're just going to do it whenever they feel ready. You don't want to be scrambling for positions on the impulses up. You want to be positioned before the impulses up, so that you can distribute when it makes sense to do so. So, okay, so that's that. Let's look at Solana next. Solana, we'll look at the index chart. Yeah, here. Oh, you're above the key inflection area, that's good. You closed above this, that is also good. Let's look at it in a different manner, because many of you don't know what key inflection areas are. Okay, 6 months. Sol. Here we go. This, on the yearly and the 6 months, again, this is where sellers are clearly active. No buying pressure within this, and that's still the case for now, right? This is what I mean. I don't think Bitcoin's finished taking the lead yet. Look, many of these are atrocious places if you think about it in terms of 6-month candle closes. But on the 6 months, you close just like ETH, you close below, right? Bitcoin's the only one. Bitcoin and total are the only ones that closed above, showing you who's still leading the market. 3-month rejection, right? Couldn't even hit the mid. Supply was too great. You didn't have enough buying pressure to go and tap that mid. This is the 3-month as well, right? Let's see. Do you have a? You don't even have a 3-month fair value gap actually. So you don't want to break below this zone. If you do, then you're pretty much going to go to this zone in my opinion for Sol. I'll mark those two down. 2 months. Here is your 2 months. Monthly. So you pretty much topped out at the area where you couldn't get any candle body closes above on the monthly before, right? You hit that, you front ran the 6-month mid. Yeah, it's not a surprise you didn't close above, right? It wasn't enough strength. It's not that phase of the market yet. We're also gonna catch bids. Solana weekly. Let's take a look at the weekly. So what do we have in terms of liquidity, right? In terms of liquidity, we have, well, this has been filled, so this is invalid. All of this here, okay? I'm gonna mark this here. This zone here, if you ever get a raid on your liquidity on the higher time frame, this is it, okay? Because you can see low, high, low, high, low. These are all external liquidities, right? Meaning someone's long from here, someone's long from here, someone's long from here. There's a lot of long orders here. Where do you think their stops are going to be? Well, it's going to be either at break even by now or below these wick lows, right? There's going to be a lot of liquidity down here somewhere. So with that in mind, if you ever get a raid of this zone, just set your alerts, right? Don't worry about anything. Just set your alerts. If you ever get a raid of this zone, for me, it's going to be I'm just going to long into strength. Just gonna long into strength. Once the liquidity rate happens, once price goes somewhere down here, and I see the, on the lower time frame, I see the order flow flipping bullish. On the on trading view, I see the signs I want to see, what I'm looking for. I will go long. Daily, yeah, you can see that clear as day. This liquidity pocket's been filled. That's why it's throwing me off. That's another, but this is another external liquidity. You have a lot of external liquidity on Sol. This is, if you were to have a dump, okay, this is gonna have a cascade event, because as soon as one of these gets stopped, that's gonna trigger. It's like dominoes, right? That's gonna lead to this being triggered, to this being triggered, and if that's strong enough, this will get triggered. So maybe you will get this fill on the lower zone, who knows? But until then, right, let's not get ahead of ourselves, expecting for lower and lower and lower all the time. Until then, I'm simply looking for areas where you can manage your risk. And with that being said, since the 3 months closed like this, right, on the last quarterly candle, this is where buyers were active, right? So just mark that out. If you get a pullback into this zone now, right, to start things off, let's say you get a weekly pullback towards the mid or something like that, you see that hold, you can try taking a play here, for sure. And if you turn key inflection areas on, actually, your range mids and your KFAs, you're actually above the key inflection area. As long as you're above 143.59, right? As long as you are above 143.59, you are gonna go higher, okay? You're gonna go back towards range mid. But if you lose 143.59, then you're gonna come down towards key inflection area mid, which correlates with the last quarterly mid, right? By zone mid. That's lost 121.96. Your liquidity rate of that's going to take you basically to range mids, in my opinion. So, if we get Solana ever between 101 to 78, I will bid the fuck out of it, okay? I will long my entire house. Well, I mean, we've got reason to believe there can be some manipulation, but also some upside, because, well, they've just literally started announcing Solana ETFs, right? And with this, we always know there's going to be some sort of reaction, right? This entire reaction happened because of the ETF announcement. So with that in mind, let's just see how this price action plays out, because this was a news-driven price action. So if you, for example, you start seeing this, okay, you start seeing daily closes above this level I was talking about, right? Above key inflection area, 143.59. If you start seeing that, time frame aligned to the hourly, look for your lower time frame entries for scalp longs, because if you close above this, then you have look for your retest wick close on the hourly, right? Put your stop loss below the retest wick low and just target, range low or range mid. Wait, that's just short. This. Just look for retest wick lows when they happen, right? And then from there, just target whether the range mid or the range mid low. Either way, your risk reward will be worth it. But it depends on the retest of 143 now. If no retest, no entry for me. That's what it is. I mean, our average sold price is, well, my average sold price is around $30 currently, right? Since our last edition was $70 on Sol, around here somewhere, $80 to $70 was the last edition I gave on Sol. Ever since then, we've had a huge spike up. So, if we do some sort of big liquidity rate, that'll be my last Sol spot edition as well. But I've got all the Sol I could want, so that's that. But these are the main ones, okay? Solana, BTC, and ETH. For big position leverage plays, these are the ones I'm going to be going for, because these are the ones that are proving themselves. Well, ETH is not just this cycle; it's proven itself multiple cycles. Same with Bitcoin, right? And Solana is clearly the darling of this cycle. So these are the ones I'm going to be big position size leveraging. ETH is still, yeah, definitely, brother. Like ETH is undervalued in the sense that, you know, I think it's not had the money rotation into it yet, right? It definitely hasn't had the money rotation into it yet. But Bitcoin always takes the lead, right? And Bitcoin dominance, if we take a look at Bitcoin dominance, there's some SFPs, but at the end of the day, this still looks like vertical accumulation for now, right? Higher highs and higher lows. So this could definitely pop up some more. So we'll see. Yeah, my inch entry was $1.44, but that was on my own call. One of my friends put me on inch. I didn't actually know what injective was before then, but yeah, injective made a nice bag off that. Hope you had one of those as well and absolutely nuked down a BTC drop. Yeah, yeah, bro. Liquidity cascades. They're very much a thing, right? It sounds like I'm saying fancy stuff. I'm just describing a scenario. It's a cascade of liquidity. Once they decide, yeah, let's just nuke everyone, the resting stops, right? That's what engineered liquidity means, right? The engineer liquidity, engineer stops. You have stops at certain places, and all of those get taken out to the main big juicy target, and then from there, market carries on like nothing happened. Keeps happening. Josh, that depends on what coin you want, brother. Okay, so with that being said, let's look at a couple coins. Well, let's look at some of the coins I've got over here. Omni, let's take a look. Okay, okay. Actually, hang on. Where did you close? That is nice. I missed that. If you wanted to try Omni for spot, I'm not gonna argue with you. This used to be a demand zone, okay? Right over here on the daily. If you take a look, well, I mean on the 12 minutes. Firstly, on the 12 hours, this is also a textbook demand zone. That has to be said, right? You're above that. But on the daily, this is an order block, a bullish order block. You flip the mid of said order block, and every time you've flipped this, you can take a look. Every time you flip this, what you've done is you've had spikes up. So actually, look, here's your first play on stream today. If you wanted to enter Omni, now's not a bad time. 12% stop, so basically maybe just put it below the 786, something like this. You know, if you want to go spot, that's nothing, right? 13%, especially if you wanted to DCA. I don't know if you should be DCAing or not in this, since the whole trigger for this is that we flip the mid on the 12 hours, right? What you could do is you could enter partial position now. Okay, enter partial position now, for example. That's something you could do. Enter partial position now. If the next 12 hours ends up closing below this mid, just cut your partial position, right? And if it flips back up, or if it closes above, and the daily closes above, then, you know, add your full position size. That's something you can do. But you'd be targeting, I mean, your external liquidity, first and foremost, right here, 4.29. Okay, your first one's here, of course. And if you do a leverage play, you definitely trim some in here, over here too. Second major one is definitely over here on the 12 hours. And then fuck this wick, I don't give a shit. This one here is your major one. This one here, just think of it like a liquidity raid. Liquidity raid this. So perhaps actually something like this. But yeah, Omni looks good. Like, look, there's clearly, like, you know, if you look at this even on the weekly, like, do we have any sort of nothing? Daily, you have a low, yeah, bullish divergence on the daily. This looks good. Yeah, I'm getting some Omni, boys. I'm getting some Omni. You know, I'm gonna get some Omni. Yeah, I'm getting some Omni. This looks good. I'm going with the strategy I just mentioned. 12-hour partial position enter now. If the daily closes above, I will manually enter again with the remaining of my position size. Just in the name of risk management. Gotta be a role model for you degens. Yeah, Omni looks good. Only per okay, Omni's one. Let's do this. This is your target at the end of the day. Who knows? You might not get this high, but you definitely trim along the way, okay? Okay, Omni. I'll call this in a minute. I'll call this later in a minute. Okay, Mubi. Like I said, I've paused layering into this for now, boys. My average is literally that fair value gap mid. I didn't close at break even because, like I said, this is a long-term spot buy for me. I'm just holding this, okay? I will, once we reclaim this, I will start layering in again because my main target's to the downside. Think about it like this, right? Why would someone keep selling this, right? Look, you've got no drawn liquidity to the downside, or you're drawing liquidity to the upside. All the blocks, supply zones, everything's to the upside. So I think it's a matter of time before Mubi goes back up as well. So just holding this one. Merlin, I'm waiting for for Merlin to recapture these levels. This one looks like actual death, okay? So Merlin, not interested in this for now. Once we start recapturing some levels, I'll alert. Already this one ran for 100% for us basically before coming back down here. Not a bad place to read the trade up, honestly. Back as support again. Okay, OP. Gave this one in my Twitter. Also my channel. This bat would be amazing on OP. Okay, not bat, sorry, this shark. Right here, you have the 886 retracement here, and you have your 1.618 extension at 1.22. This entire zone for me, I'm going to layer into spot already. Okay, so I did my started my layering in here. I've got some positions. I'm just gonna layer in slowly over time. Deeper here, I've got a separate allocation for this. If you get here, I've got a separate allocation I'm gonna bring in and just absolutely heavily DCA into this. But for a swing, and this ain't a bad spot for OP. LDO, this one ran for 41%, still in the green for us. We got such a good entry on this that this dump didn't really affect us at all. So yeah, LDO, beta play on ETH, right? So obviously if you think ETH's gonna perform, you're gonna be looking at ETH betas. LDO looks good still. ENS, now this one I was meant to call, but I didn't. I was gonna wait for the daily close, right? But basically what happened was, my entry was going to be a successful daily retest rather of the value area high, okay? But you can see, as soon as you tap the value area high, the daily close all the way here, so I'm not calling that. So what you've done for now on ENS is, you've hit the 3-month fair value gap, and you're rejecting off that for now. So now on the weekly or something like that, if we do ever get a touchback, because at the end of the day, we haven't had a weekly retest here, right? If we get a weekly tap back into this area like this, I'm going to be bidding ENS, because look, big range, accumulation range, we're breaking out of that said range right now. The only thing I'm worried about is that this could, just in case this is a deviation, right? Since I missed the lower time frame entry, I'm going to wait for the higher time frame entry now. Or I just missed a trade. I do not care. There's plenty of coins that look good, okay? And that one thing you got to get comfortable with is saying no, right? Saying no. You got to be comfortable with saying that. If something misses your entry, don't FOMO in just because it looks good, okay? If you missed your rule set, fuck it, just look for something else that is within your rule set, right? For me, I missed a daily entry because I should have gone in on the 12-hour retest. So I was doing a stream yesterday when the 12-hour had a successful retest. I was like, yeah, I might enter on the daily close. I should have just gone on the 12 hours with the partial position strategy I just mentioned. But it is what it is. It's not gonna catch everything. But any sort of retest back into this area, yeah, it's a bid for me on ENS. Because look, at the end of the day, you're breaking out a major accumulation zone, right? Here, look. Major accumulation zone, you've broken out of it. Give me some sort of retest on the weekly now, and this is gonna send. ETH narrative, right? ETH beta play. So that's good. CRV. Now I don't know how many times we need to look at this one. It looks like absolute death, of course, but if you ever reclaim this level on CRV, if I get something like this, breakout and a tap back into 0.329, okay? You're buying CRV, understand, at 2020 lows, okay? And this is a coin that at one point was 45, right? So I'm not saying it's going to go back to 45, but it definitely has some room for upside as long as you capture. I'm not saying enter this right now. You're bouncing off of extensions, but price action wise, that's nothing. Okay. So for now, flip the 0, then you've got a low risk entry on your hands. But until then, don't touch this. Look at Sol, looking at Pith here. Oh, I gave this one somewhere else yesterday. Screen for now, but let's see. Weekly closed. Yeah, that's a good weekly close. Successful retest off. This is a demand zone, I believe. Yeah, daily demand. Hit the mid, high, low, grinding up slowly, right? If you so for now, if you're not already in some Pith, if you get a flip of the 886, I'd start layering it. Okay, I've not gone full position size on this either. So if you flip the 886, I'll average up. You flip the 87, I'll average up, right? If you flip this mid, I'll average up, because down here is where you actually want to average. Because where are you going to get the proper move? The proper move is going to happen once you start reclaiming these levels. Because from here, you're going to impulse up to here. Flip this, you're going to impulse up all the way here, right? That's your targets. So these are areas where you average up, right? And you average up down here. It doesn't matter you missed this, because at the end of the day, if you zoom out, it doesn't matter where your entry is here or here. If at one day you think this actually can go to highs, and for me, I think Pith can go to new all-time highs, right? Because if Sol does catch that big move, Sol betas are going to absolutely rip, right? Higher low, key demand zone held. So Pith does look good. Okay, flip the 886, average up. Like, just set a limit for, just draw a rectangle between 0.3392 and 0.3242. Just set some alerts. You start seeing closes and holes of the low of that zone. You know, add, slowly average up, mid, add, average up, top, mid, average up here, average up, and then hopefully you'll have a nice bag with, you know, average price being somewhere over here as you do this. By the time you get and you go start flipping these levels that actually matter, and when that happens, that's where you catch the big impulses. This is where you start to distribute, right? And you can distribute some here, or, you know, if it's a long-term bag, just wait until you get closer to all-time highs again, major, you know, fib retracements, therefore distribute some. That's the way to do it. You don't add once you get here, right? This is where you should be looking to distribute, if anything. You don't just add in places where people who actually bought in a sensible manner are going to distribute on you. You're literally going to be buying someone's bags. So Pith looks good. Yeah, Grasadi, bro. That's why I've not gone all in on OP yet. I'm being wary of that move down. Oh, was it due to news? Okay, yeah. Yeah, the SEC. Yeah, fuck the news, bro. That's gonna get, I bet that's gonna get reversed on soon enough. Okay, so that's Pith. These stocks have done amazing, by the way. I kept updating them on my channel, but, you know, 67% impulse on this one, 41% impulse on this one. Where's Hive? Not Hive. What's the other one I gave? Can or Hut? Hut. Yeah, all of these, right? 51% impulse on this one. Stocks have been printing from a couple streams ago. They all still look good, by the way. Okay, so look at Atom, Injective. Okay, downtrending for now. But if you're on the weekly, right? If you flip this area, if you flip the area between 22.52 to 20.50 into support, then you're looking at impulse up towards 25. You flip that, impulse up to 27. Flip that, impulse up to 29. Flip this, I think you have all the way up back up to 44 potentially on your hands. Injective ain't done, okay? I think, you know, this probably goes higher by the time the full-blown market comes around. So it's just a matter of, look, all these coins that performed well so far, that are making higher lows, that you wish you had the chance to buy. Look, back then, if you saw Injective at $53, would you not kill to buy Injective at 18? But now you're getting Injective at 18, you want to sit on your hands because it might go lower. That's, just understand, that is classic psychology which prevents you from making money in this market, okay? You got to combat that. You got to snip it at its source. So I did give the Injective bids. We got our bids filled here. We had the impulse up, came back down. So, you know, we're just holding the bids for now. If we get deeper entries, I'll add. Or if we get the high-low confirmation now, I'll add then, okay? Say had a slight move down, didn't it? It was looking so good here. and then the bids just didn't come through for this, I'm afraid. Say it's currently at a daily demand zone at the lows of that, right? If it wants to go a bit lower, it has this demand zone here to work with, 0.32 to 0.294. Honestly, not a bad place to start re-adding to say, right? Not a bad place to start re-adding over here. Not a bad place at all. Key areas. And this is a new coin, remember. This has not been tested in a full bull market yet. This will go back up, in my opinion, right? Unless, you know, the entire chain gets hacked and they go down or something. Say will go back up. So this is definitely something I'm accumulating. Here's your major liquidity pockets. Look, not a bad area. Just accumulate, accumulate, accumulate. For spot, if you're looking for spot, accumulate. Dino coin, not interested in this for now. But then you are at value area low. Damn. Could this get any better? 786 plus value area low. But is Carver even got a narrative for it though? Ah, damn. Okay, I'm going to keep an eye on this one. I'm not going to enter yet, but this is an amazing looking chart in terms of macro value area low plus... Oh, wait, no. Wait. Hang on. Let me delete this. That is old settings. Let me use the updated settings. Where are you now? Still same position or not? Okay, no, that's good. Still same position. Okay, that looks good then. Yeah, this looks amazing. So yeah, this has come up a bit higher now. Yeah, if these lows hold, damn, it looks good. This cover looks good. Low risk areas, honestly. I mean, for spot, you know, you couldn't ask for anything better here. You want a DCA, enter in DCA. Look, you just do it here. Red box. But yeah, like I said, I don't know if Carver has a narrative, which is why I'm being a bit cautious right now. Arbitrum, look, this lows are still being held. I like this trend that buyers are demonstrating here. You're currently trending between the second and third standard deviation value area low of the macro range. This still looks amazing to me. 886, accumulate, distribute to a valid liquidity pocket. The day you reclaim these, oh my days, I'm gonna scream excitement because ARB has the potential to run all the way back up to here. That's the thing, guys. And flip, this is new all-time highs. And for me, ARB is definitely gonna go to new all-time highs, in my opinion. Okay, when full-blown bull market comes around, these new coins that have use cases, that have TVLs in the millions, right? They're gonna run. And obviously GMX. GMX is a DEX on ARB. And this is a bag I gave before. This ran up, I've not actually updated this at all. This ran up 77% from average entry. And then right now it's making a higher low. You have got a shark, okay? Right over here. XAB doesn't really matter for a shark. BC 1.35 and then 842. It's not an 886 exactly, but you know, hey, at this point I'm not being too, it's not a, let's say it's not a perfect shark, but it's a shark nonetheless. 886 will basically take it to the mid. Okay, so this is a if you flip this now, if you flip again, flip the 764786, you have a reason to enter, right? Especially if you do something like this, like flip the 88786, partial position size, flip the 764, partial position size, because look, resistance, flip the support. If that happens, straight with 702 707. And history says you never actually just straight up reject at the 702 707, most likely. You probably go a bit higher. So yeah, GMX definitely going to be averaging up on this one, right? This is a long-term spot back for me. I gave this one along with DIDX a while ago. Now there's a few in here. Let's take a look at Blur. Blur's actually going down since I gave this call. It was looking so good, and then that blast airdrop came out, I think. I didn't even know what that was. So I think a lot of unstaking happened. Just in time, like literally the day after, I shared this in Twitter. But yeah, I entered once, right? Full position size isn't in yet, and I'm not going to DCA blindly on this. I've not layered in since the since the initial entry. So if this hit stops, I'm losing peanuts. So I'm just going to hold for now. I would just simply average up if we hit, like, you know, I'll see if there's any, yeah, for example, there's demand zones here, right? If you hit the low of the demand zones, something like this, I'll layer in a bit more. But my main layering now is going to happen once we reclaim this blue line. If not, I'm not gonna layer in because I didn't know about all the unstaking and stuff. People seemed happy to unstake, which is never a good sign, right? It's never a good sign. Zen is up 14%. God damn. I was literally looking at this yesterday. So damn, I should have called this yesterday. Never mind. Okay, if you reclaim this on Zen, fuck's sake. Okay, if you reclaim this on Zen, look to get in. Zen, they do have a fundamental news out, so that's probably why. Plus, just look at the chart, bro. Range lows for Zen. Let me look at it from here, right? Zen. Yeah, this was the call I gave on this yesterday somewhere else on a live stream. $0.94 held on the retracement, and now you've gone to the 87886, right? So you flip that, you're gonna go higher, but that's really annoying. You're at a high time frame supply zone here on the weekly. You can see that, so it's gonna be hard for you to break through this. But once you start seeing levels being flipped, right? If this grinds back down, makes a higher low, for example, definitely try and have some. I'm not saying definitely get some, but it's a nice alt where you can manage your risks really, really well. SNX. Range lows, you can see on SNX, right? Here's your range low. A play like this on SNX, actually, yeah. This one's valid. Still a range lows, you haven't had an impulse yet, so SNX is a good area. Low, order block, liquidity pocket here. Your rate is going to take you somewhere below. I wouldn't place any hard stops on this, okay? I just don't place hard stops at range lows because if you're on a macro range low and you get stopped on a liquidity rate, you're going to be kicking yourself when it closes back above and you go up, okay? So for me, it's if you have a confirmation loss of the range lows, that's where I'd cut, okay? I'll just put that there because that's the area, that you want to see reclaimed if you do lose it. So no hard stops for me if you do enter things like this. Man, I'm mad about this end, bro. I wish I'd called this here. I'm in, but I wish I'd actually called it here. I was going to save it for today's stream. I didn't think it'd get impulsed this very next day. Okay, NKN, another one. If you look at the actual chart for this bad boy, look how low risk this is. Same thing, right? If you enter here, you can literally just, if you get a confirmed loss of this area, right? Because you do have a demand zone here at the end of the day, you could liquidity rate too. If you get a confirmed loss of this low and you don't get good reaction of the demand zones, you can cut it, right? Very, very simple. But this one, again, nice move up potential, right? Potential for nice moves up on this one. ICP. Now this bad boy, I want to read this up. I call this one literally here. That wasn't in, oh yeah, was I in Unity when I called this? I'm not sure. I'm not sure if I gave this in Unity anyway, but I did literally ping the low on this, entered a really nice long here. Like I said, October, September last year, that was when, no need to layer in. Everything was at areas where you can manage your risk. One, good position size in one move, bang. Sets it and forgets it, right? It was really, really easy. Now you do have to worry about, okay, layering in and stuff. So you are currently at, I believe this was a monthly fair value gap. Yeah, monthly fair value gap, right? The mid of the monthly fair value gap is just below. I don't know if you're going to hit it or not, but it'd be good if you did. You do have a potential shock on ICP, right? The potential shock, the 886 could take you as low as $4.93, right? And again, there's a demand zone there. There's a reason why it could go there. But, this entire area for me, just layer in, right? On spot, just layer in. Because for me, ICP is one of the, I think ICP is going to be a banger, personally speaking. I've got a friend who I met through a one-on-one. He took my class. He's very big into computing and stuff, right? And he's saying ICP is doing game-changing things, and if they succeed, they're going to be huge. He's saying top 5, and I trust him. So that's why I'm not going to enter based on fundamental news, of course. I'm still going to be entering based on TA, which is why I'm saying you have a potential to go lower, liquidity pocket, so on and so forth. But yeah, this one looks good. So we'll see. I mean, at the end of the day, this is a coin that was at one point at $500. Look, on this particular chart on MEXC, right? If you get the opportunity to buy something like that at $4.93 again. Why would you not take a risk, you know? This gave us a 592% move up originally. Let's see if we can catch a banger for the next leg. So keep an eye on ICT, ICP too. But yeah, there's a lot of coins. SHX, this is another one I'm watching. This is given to me by another one of my one-on-one students. At the range lows, you've hit the liquidity rate of the golden pocket, at a demand zone, buys are showing strength, right? I'm waiting for this potential Gartley. I really want this Gartley to hit, just because it'd be so nice TA-wise, but I know there's no guarantee, right? So I'm just waiting for now. But if this Gartley hits, that'd be amazing. Amazing entry on this. 764786, 786 Gartley. This would be amazing. Shucks. Okay. eGold is up from our entry. It is up 18%. You can feel free to trim some at the mid of this, by the way, right? For those of you that did enter, feel free to trim some between $32 and $35, because at the end of the day, look, major support, right? If you flip the resistance, you might just chop back down. And what you can always do is you can just, if you get the confirmed flip, you can just always re-add some position size, average up for the next move up, right? Because this is looking just like, you know, look, this is a bat, right? 886 pretty much, and now you're gonna send it up from a demand zone. Like, this looks good. So yeah, there's eGold, spec. Then you hit the lows on this, huh? You hit the 0.5 and you're bouncing off now. Flipper range highs, you can get in. This is probably confusing for some of you. Let me turn some of these fibs off. Here, for spec, if you flip this level here, the red box, right? Basically, if you come and flip the 3-4, 6.8674, if you get the flip, you'll have wait for the retest low, wick low to come in, wait for the confirmation to open green. Once that you've got the confirmation, once the flip has been confirmed, enter a long, stop loss below the retest wick low. You can target the higher target. Supply zone here, that'd be my first target for spec once the flip happens. Aptos, oh yeah, Aptos is this is a very high conviction play for me. I think Aptos is going to do numbers in the bull. Look at the areas it's at. 6-month buyer control, right? Same thing as we did with Bitcoin earlier, but now what I'm doing is, if I unlock this, look, on the 6-month candle, right? This is where buyers were in control before. And now, what this area can act up, what this area can basically act as a support zone, right? Because this is the area where buyers were active. Therefore, as long as, you know, buyers stay in control here, you have no reason to hold for lower. There. Aptos, amazing area. Look, even I wouldn't be surprised if you just ping straight back up towards this. But that's what's done. Look, if you hold this, history says you go back up here. And if you hold this, especially if you flip the 6-month buyer control, that'll be the last place to average up. After that, it's just a matter of hold, or, you know, just wait until the lower targets get hit, average down again, right? Just literally that. Hold and up. APT, high conviction play for me. Maker, MKR. Tony Hawk Pro Skater vibes with this chart pattern here. Seller zone, that's where you hit, back down. Imagine if this is just one big fucking cup and handle, bro, and this is your handle. That'd be crazy. Okay, let's take a look. What did you retest? You retested, okay, buyer controlled area here. That much is obvious. Turn into rejection, turn into resistance, flip to support. Beautiful. If you wanted to enter some spot maker, honestly, you could do so. Just layer in slowly. As long as you don't lose this, you can just layer in, right? Targets up here. By the time, if this cup, let's say you don't make a macro cup and handle, if it breaks out, I don't know if Maker's ever going to get to these prices. Right? I'm not saying it's definitely going to do that. I don't know. 7k Maker, is that even feasible? I don't know. But hey, I mean, TA wise, if the cup and handle plays out, that's what it is, right? So, well, let's wait to see if you actually form a handle first, right? But not a bad place to layer into spots and just close if you lose these lows, because then you have no reason to hold, and just re-enter when you reclaim. Zenny's just going, man. Oh, fuck's sake, bro. Sorry about this one, guys. I should have called it yesterday. I was gonna do it in today's stream, but I didn't realize, well, I didn't think we'd get the impulse straight away. If you get the flip, just enter on the flip. Looking for this. Even on, if you wanted to take trades on leverage now, maybe look for those 1 hour retest, breakout retest. If after you see those 1 hour to 4 hour retest candles and confirmations being green, then just enter there. Currently you are at a 4 hour supply zone right over here, right? That's been taken out. So if you can flip this area, you can run higher. That's what it is. There, okay. So let's see if you guys have any requests anyway. Let me go back and check chat. Yeah, I'll take a look at WLD with, let's see. I think I actually have WLD here, WorldCoin, as one of the ones I wanted to call. Oh, I think it's under here. Hoppy, goddamn. I'm up 165% on this one. What I need to do is I need to get a bot. You know the bot where it's like you call in one server and it goes to the other ones. Because this is a spot call I gave, the server, literally in between client meetings for my business. And I was telling myself, okay, after I finish, the next client meetings, I'll give it in like Unity and so on and so forth. Because I was literally rushing in between client. Of course, I just forgot after the client meeting. By the time I check back in, it's already up. I'm like, oh shit, yeah, I only called this in one place. So I really need to get a bot. But yeah, this would have been a banger. Would it grab a top spot for, in terms of returns this month if I'd call this in Unity? It's what it is though. Okay, let's take a look. WorldCoin. The reason I'm looking at this first is because I am interested in this because of the area it's in, right? Here, I've not entered this yet. I'm just watching, right? Watching for price action to show strength. But you are currently at a weekly demand zone on WorldCoin, right? And for you might be putting in like a double bottom structure here. You never know. But even within that 2-week demand zone, you are now coming to a 3-day textbook demand zone, and you're hitting the mid of that. Basically, you've actually hit the mid of the demand zone. If you wanted to enter a trade on WorldCoin, at least I'd say okay, fair enough, because the risk to reward says, you know what, it might be a good, it's worth it in terms of risk to reward, right? 12% risk, less, especially if you enter on spot. Even if you go and retest, back up here, right? This breakdown, make a lower high somewhere up here, still an 8.55 RR trade. So WorldCoin, very easy to strategize your risks here. The only problem with this coin is I do not know what it does. I think it was to do with that digital residency program, but I think didn't the founder scam or something? So I don't know. Fundamental wise, I do not know what this coin is. Okay, like heads up. But yeah, not a bad place to manage your risks here, bro, for WorldCoin. If we take a look at this on log once, one sec. Where's it gone? Am I blind? Here. If we take a look at this in terms of log, you are approaching the 236, right? You are approaching the 236, and again, the 236 lies within that 3-day demand zone we're talking about. Plus, there's a 3-day order block here as well. Here we go. Yeah, like I said, I don't know what this coin does, so it's not a play of confidence in terms of, okay, yeah, strong backing, there's backers for this coin, it's going to change the world. I'm not going to tell you any of that. TA wise, you can manage your risk, and that's all. So if you're happy with the risk management and you are interested in this project, not a bad place to long. Like I said, something like this could be a trade. And again, for coins like this, I would go for a higher time frame, loss of the level, confirmation loss for risk. Personally, I would not go with a hard stop, okay? But if you're not comfortable / you don't have the skills or the emotional control to be able to do manual stops, basically, right? Do manual closes, then just go with a hard stop. Just extend it a bit. Potential liquidity rates include somewhere down here, for example, right? Depends how tight you want your risk is, how far down you're going to put your stops. But you could just do it below this wick for simplicity's sake. Tensor, okay, good. You're getting the breakdown. This is what I'm hoping ENS does, by the way. I'm hoping ENS does something like this, because Tensor looked ready to break out, right? And then it just fucking nuked. I hope ENS does this, because I'm so mad about that, just pop up yesterday. Okay, let me go back to chat. Yeah, I had a couple DMs as well from people who were advertising bot services, bro. I'll probably just like I'll ask around and see you can do one. Okay, Bart says W. Sorry, gotta prioritize my students. So let's go for W. Hang on, I've got this in my master list. Let me check from there. W is Solana, right? Yes, it is. Holy shit, this dropped. Okay, well, this would have hit stop loss or break even for me, guys. I didn't even realize this dropped so hard. But we did get 71% increase on this twice, and we did trim stop loss or break even. So it's a green trade. We're just looking for re-entry now. Okay, let me let's take a look. What do we have? We have an uptrend, low, high, higher low, and in that uptrend we also have, let me put the inverse down. Okay, so you are currently reacting at the minus 0.5. If you wanted to have this, serves basically my system, this is a liquidity rate to your range extreme. So if this liquidity rate is valid, this is your first liquidity rate. If buyers step in here, you're looking for the reclaim to enter. If not, you might get one more drop down towards the negative 11413, 0.24 to 0.21. If you get this and you see strength coming in here, then go for the lower time frame range play. Look for that scalp to swing mindset play, okay? Because you'll have an opportunity of a lifetime to catch the low before the reclaim happens. You can average up and then keep averaging up, right? But here was your first sell box, here was your second sell box. For all you know, this could be your third before some sort of liquidity raid, reclaim, and then your, I believe the ICT people call this your MMXM model or something like this comes into play. I'm not an ICT person, so I'm not going to do that. Bunch of virgins. Right, hang on. Here we go. Here's your liquidity rate area. If you see strength at the minus 0.05, right? Look for the lower time frame range to form. For example, on the hourly, if we take a look here now, or the 4 hours might be easier to see. We do see some sort of range forming, don't we? So let's see. Range extreme, for now, I would say is here, because this is a supply zone, right? This is not a range, this is a supply zone. We're here. So you can see, right? That's what you're rejecting off of. So you might come down for the 0.05 again, because you can see every time you reject here, you actually come down towards this for support, right? So if you do come down here, I wouldn't blindly bid here until you see strength, because that would be your range mid, right? Because now your range, no candle body closes above this area. Let's do that for now. No candle body closes below here. Marking this out, right? This is your true range. You're rejecting off a range highs for now. Obviously, you can see this is not somewhere you long blindly. If you come back down towards range lows, then if you see some sort of raid of this range, for example, right, on the daily, not much lower. On the, what about on the 1 hour? We'll probably go a bit lower. Yeah, on the 1 hour, you can go a bit lower. So on the hourly, this is as low as you went. So let me mark that down. Here we go, right? So no, let's go 4 hours. Yeah, there we go. 0.3457. I'd base my price action analysis around this. Okay, if you get something like this, rate the lows, reclaim, that's an entry. Or you come down and you see successful retests and holds of this level, that is also an entry with stop loss below the successful holds. Or last but not least, you go and you actually start flipping this area, that is an entry as well, right? At the confirm flip, you're running it back towards the zero. Confirm this breakdown, because by the looks of things, look, you had a breakdown, you have a supply zone, but you don't have a retest, okay? So these are the three triggers. Either you rate the lows and then you reclaim, in which case you enter on the reclaim. Either you come down and retest the range mid area here, and you have successful retests, and if the confirmations are green, then you enter there. That's your second entry. Or your third entry is you actually break out here and you start to flip this supply zone. Okay, if you flip the low, the mid, for example, especially, I would say if you start flipping the mid of this into support, then that is your entry. And your target, your first target, your obvious target is right here at the 0. Supply zone there, plus, you know, that's your actual range low, right? Look, range low. If that holds, then your next target is going to be towards here, right? And over there, would you know it, we have another nice liquidity cluster right over here. That's your second target based on, you know, historical price action as well. So those are your three entry scenarios, and this is your, you know, 2 major TPs that I see coming up. Because look, after there, the reason I'm saying those are your 2 major TPs is because even on the daily you can see that's range lows, right? This is the area where you definitely take TP buy, because then what you can do is if you then break up right from here and you start to reclaim these range lows, you can simply re-add to your position size or open a new trade, right? But just know that this is the bottom of your daily range, so you haven't had a retest of that breakdown. The retest is what you're playing at here. So that's W for you, bro. Hope that helps. Yeah, bro. Yeah, I'm always like in streams with Hoff, so everything ICT wise is I know him. I know through him. Yeah, Felix, bro. I'm not sure about WLD. That's what I'm saying. I don't know. Fundamental wise, I've got no idea with WLD, right? It's just risk to reward wise. Okay, but thanks for letting me know, Felix, bro. Yeah, yeah. He's got some of the best streams in this space, bro. Let's see. Let me go above. Render, Pepe. Let's take a look at some of those. Okay, let me take a look at Render first, because that is a AI sweetheart. By the way, Loopring. This one hit stop loss and break even for us, but it did hit a very, very important level, by the way, guys. I was just going to mention, I was looking at this yesterday. We could bounce perfectly off of that 0.66, okay, on the trend-based sub-extension. And you also retested, if you take a look at this supply line, you've retested that as well. So honestly, not a bad place. I mean, even if it's a zoom out, look at this on spot. Not a bad place to go spot on Loopring, okay? So that hit stop loss to break even. I can get rid of this. Get rid of this. Let's make this 3 for 3 on trades I've given for Loopring. So let's look for fresh ideas on this. Bang. Get out of here. So if you were to enter Loopring here, start layering in. For spot, this is the range I'd be willing to play with, 34% to layer in. TP1, if you're trading, 6 RR trade, straight back up to range highs. Okay, Loopring. There you go. But yeah, let's go to where is it? Let's go to Render. Render should be here under called. So we're looking. Okay, Shark. T1, T2 didn't take out A to C target. This harmonic is still in play. Okay, the lows have not been raided. You're simply back to the range mid. Okay, this is your range mid for this historical range. You're back to the range mid. Previous all-time highs, look, you're constantly using that as support. What do I see here? 1 second. Anything on the monthly? No. One second, let me get rid of this. That's out the window. Group 4. Here is a monthly fair value gap. If you do decide to have a market-wide dump, right, for whatever reason, this is the area I would love to pick some render up. Monthly fair value gap right over here. Basically, this entire box is something I'll be layering into spot render if we get it. But more locally speaking, right, we do have the harmonic here. And we also have, by the looks of things, 1 second, let me see. Nah, I don't think this is gonna happen. I do not see render getting this low again. Let me get rid of that. Let's look for something. The 3-day. What do I see? Do I see anything? There we go. That is a shark on render. Right over there. So, complete a shark at a key area, right? You see strength coming in from the buyers at the key area again for render. And bear in mind, this shark is following another shark we've already had, right over here, the 886, right? So, if this shark is valid, your B point is right over here. There's your TP1. And your A to C, basically I'd be targeting this zone here. There's your TP2. And then if you get above that, your original A to C zone is right over here. That's your TP3. Here is a daily order block, and daily order blocks do tend to get filled quite fast. So you could layer in partial position size and then DCA at this daily order block, right? Like this, and then so D points, I'm gonna put my stop loss below those wick lows, 9.66%. But risk to reward wise, if this target hits, it's worth it. 6.16 RR trade. So this is render for you right over here. If you go spot, even easier, right? You're still looking at a 59 to 60% move up. So that's render for, I know someone asked for render. New harmonic in play right over here. $886. Oh, nice, bro. Yeah, actually, I missed that. There's a 382, 886. That's a nice bat, isn't it? Yeah. Well, I mean, Grassari's got another set of harmonics for you there in chat. Look, you have a bat there too. So yeah, but yeah, render at an area where you can at least strategize some entries, right? Risk to reward wise, in terms of bids, you can strategize entries there. So that's render. Let me go back. Pepe, that's the other one I'm going to look at. Okay, let's take a look at Pepe. Watching this one, sorry, I know I keep going back and forth. FXS, huge accumulation range here, right? This is what I mean about engineered liquidity, by the way, guys, right? Look what this is, okay? Lows, higher lows, higher lows, higher lows, higher lows, bam, cascade, right? This is the liquidity cascade I was mentioning. Look, lows, higher lows, higher lows, higher lows. This is a sign of engineered liquidity. They're leaving higher lows, higher lows. People are going long, 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 long. Resting stops, resting stops, resting stops, resting stops. Big resting stops below here. Therefore, when you eventually tag everyone out, this is what happens, a liquidity cascade. And that typically, liquidity cascades tend to go to where stops are, but also on top of that, to external targets. This is a weekly demand zone, okay? There's anyone who went long in this area probably had the stop somewhere here. So if you trade the demand zone somewhere down here, I would, if you don't want to hold FXS if it goes below here, basically, right? 2.488. But if you want to enter some spot FXS, right? And you know, I've not actually done fundamental analysis research on this yet, so I'm not sure what they do properly. I think this was one of the China coins, but still, risk to reward wise, it's more than worth it at where we currently are, okay? And this could potentially put in a huge AMD model, because everyone likes to draw boxes and say AMD model, but many people do it wrong because their manipulation doesn't make any sense, okay? Your manipulation needs to have taken out some sort of liquidity, right? And in this case, this liquidity got taken out, plus you went into a liquidity pocket. The manipulation would make sense. So even if you don't want to enter here, your safer entry would be wait to see if you reclaim the range lows at 0.94 basically, right? Once that happens, you have your distribution phase, right? And then you just be layering in before the spikes went up. So FXS, another one, low risk, right? In terms of risk management, really, really low risk. Ape, literally, I'm not going to talk about this yet because it's a price discovery to the downside. You need to recapture basically $1. You need to recapture that one for you to go higher, right? You need to recapture this area here. This $1 low. Wait. The hell? This is the area you absolutely need to recapture. If you don't capture this, you're gonna go lower. And what you're doing right now, nasty work. Look, retest, failed retest, failed retests. The only reason I didn't give this short is because I don't want to give a short on an asset that's already down like 99%, right? Otherwise, this was a prime example of a short. Support, breakdown, confirmed loss, right? This is what I mean. Manual closes, this is where you would manually close. Let's say you'd entered at these lows. You'd pretty much close a break even, right? because you've got a confirmed loss and failures from buys to get above. You close here, you lose nothing, right? You enter back if you get that reclaim. So that's the safe way to do manual plays, right? So if you get this reclaim now, look, you're gonna have a very, 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 very low risk entry on Ape, okay? But as long as you're below that level, you are on the wrong side of the trade. You're not gonna be long here, okay? Okay, so sorry, Pepe USDT. What the hell? Oh wait. What do you mean, bro? Oh wait, no. Yeah, 1 sec. Sorry. There. So Pepe hit that zone I gave actually. I gave this zone a few streams ago. Right here. That liquidity rate, daily order block, that got tagged higher now. So what you're doing here is you are over here, over here. I mean, do you have a big bull flag on your hands? Possibly. Wouldn't be surprised, in all honesty. If you got these, you got the lows. Some of my spot orders would probably have triggered then. I just haven't checked my long-term spot bags. Yeah, okay, so that one triggered. For new entries, if you haven't entered yet, where you are at a daily supply zone, okay? And on the 12 hours, it's going to be much clearer, yeah? Daily / 12-hour supply zone. The whole reason you wicked into here and you rejected, right? So I wouldn't enter blindly here. Maybe enter at the reclaim of the low of this, because that way you know you're working through the supply zone. Or I mean, that order block got hit already. So if you get a deeper pull into this, that'd be your next entry. Either enter here or wait for a deeper pull into this, as I'm seeing right now. Unless I'm missing a 4-hour liquidity pocket or something. No, I'm not missing anything on the 4 hours. I mean, here's your 4-hour area where buyers were active. Here's your 12-hour areas where buyers were active. And this candle confirmed that. So if you get any sort of pullback into this, you could look for scalps there. And I say scalps because look, this is a major higher time frame. Oh, but isn't it though? 1 sec. Okay, no, never mind here. Okay. On the entry you can look for right over here, right? If you know this is an area on the 12 hours on the daily where buyers were active, right? Over here. Let's go with the daily. On the daily, this is the area where the buyers were active in the last daily candle. Therefore, if used daily to 1 hour price action, 1 hour time frame alignment, if you get a pullback into this, especially the mid, right, or lower, it might be worth a long, especially if you get these lower risk areas, right, like the lower down you go, especially considering this is previous all-time highs. And if you lose this, that's when I would start thinking about, okay, we might go down towards the daily order block again, down here, down over here, right? So I'll go on Pepe. I've not done full position size on Pepe yet, right? So after I pretty much called this one at the bottom last year, this ran up. For those of you that were here, you know, since last year, remember this play. I've not entered back since then, okay? Because I missed this high low. So now I don't want to miss the next high low. So I'll be keeping an eye on this. I've already got back started here, like I said. I'll either average up until we have a breakout, or if we get one more rate towards the lows here, I will average down, but still have a bag for Pepe. No, brother, what I mean is, like, for my own personal way of reading price action, that's just how I read things, right? I'm taking this as the area where buyers were active. Therefore, I want to see strength coming back into this area. If not, we turn this to resistance, then we can expect the lower targets to hit, basically. Let's see. Zen, okay. Percent and XRA. True, okay. Right, how long have I been streaming for? Let me check. Not sure, but probably a while. Okay, guys, what I'll do is I'll end this stream here. Wait. Aave, if I remember correctly, I was looking at this. Hang on. There's a lot of good coins right now. Aave, accumulation range on the higher time frame. You can actually see this very clearly on something like the weekly, right? Accumulation, accumulation, accumulation. Also had compression going on in this particular part of the chart, just like this, right? Breakout, and you just about front around this liquidity. No, he tapped it, never mind. Breakout, here's your retest of the liquidity pocket, retest of the range mid, right? On last week, last week before last week, retest your range mid, and now you've completely closed above this accumulation range right over here, right? You have a lower time frame accumulation range here. Daily, you can see range highs, range lows. If you get any sort of pullback towards range mid or anything like that, I'd stop bidding RV in my opinion. Or if you don't, you know, on the 1 hour, let's see. Let's say you start seeing 1 hour successful retests of this level. You already had once here, but just in case you get once more, right? Like 4 hour successful retest, 1 hour successful retest of this level once more. RVs are long, in my opinion. Vertical accumulation, vertical accumulation. I do not know if these people are going to get stopped out, which is the whole reason I'm not giving a higher time frame play on this yet. Okay, if you enter here, it's going to be a lower time frame play. You want tight risks, so wait for the 1 hour retest candles or the 4 hour retest candles when we do get them. If the retests are successful, confirmation is green, you'd enter a long. Because the reason you want to do lower time frame for this, if you don't, then like I said again, all of this is engineered liquidity for one, you know, lower time frame liquidity cascade, maybe down towards the range mid, maybe down to this liquidity pocket, but for whatever reason, there's a lot of liquidity pockets to the downside. You could still come down to if, you know, market has a dump, right? So no high time frame entries on RV for now, since you've already broken out of range highs. Only lower time frame retest entries. But RV does look good. I do want this in my long term bag. Accumulation looks. So we've just been accumulating this for a long time, right? And now you're looking like you want to break out of the set accumulation range. Your targets are very obvious. It's literally just the external liquidity here. One, and then, you know, your second one's just the ray here, and then the third one, literally this huge zone up here. If RV were to go back to its previous prices, higher time frame targets are right there. And if you're doing more aggressive TPing, then you also have intermediary targets over here, just like that. There. But you've got a lot of targets to the upside for RV, not much to the downside. So that's the reason I'm looking for a breakout. And another falling wedge here. Yeah, there we go. So RV does look good. So yeah, a lot of setups we went over this stream, guys, and you know, if I see any new ones, I'll put them on my channel as well. But it's always a good area. So there's so many. We could be here all day looking at all these different ones. But AVAX is another one, by the way. That's amazing areas. But yeah, a lot of streams, a lot of setups we went over today. Hopefully you guys found this interesting, found this helpful. Yo, thanks, bro, Caleb. Nice to see you in here, man. So yeah, guys, I'll any new plays I enter, I'll be putting in my channel. If you, in the meantime, if you have any questions, just reach out to me in crypto chat or anything like that. And yeah, man, like I said, bro, this quarterly close was amazing, right? Look, next 2 months, just be vigilant. I do think we have chop coming. I'm not gonna say for sure, but the 2 month candle closes telling me so far we could probably have one more 2 month chop candle here. So just keep that in mind. So don't go all in yet if you're not positioned. I know FOMO can be a hard thing to manage. If you have logical places to take hedges like the one I gave at the start of this stream, do take them. If you're only positioned to one side, that is, right? But apart from that, yeah, keep it safe. I think we just got to survive the chop. At some point, you're gonna reap the rewards, because I don't think the cycle's over. Okay, this is your local resistance because of where we are, but eventually I do think we're going to impulse higher on Bitcoin, so just keep that in mind. But yeah, thanks guys. Come on. I'm there from the 15th to the 17th, bro, in Barca. Yeah, bro, let's do it. But yeah, thanks guys. If any of you interested in one-on-ones, mentorships, just send me a DM. Otherwise, I'll catch you in next week's stream or in the chat, guys. Thanks, Grizzly. Thanks, Trip, bro. Yeah. Right, catch you guys in a bit. Bye-bye.